We continue to focus on bottom-up opportunities. Interestingly, there are early signs of improvement in terms of corporate fundamentals. A few industries specifically, such as internet, online gaming, e-commerce selectively, and power equipment, and then EV supply chain, and also certain AI smartphone-driven hardware companies. So we've seen that the opportunity set from the bottom-up perspective have improved compared to last year. And so that really, it's a better set than before, even though broad-based recovery has not happened. But the other challenge it will be because the market continue to trade on policies and then speculations or sentiment, the valuation of the Chinese equities is very difficult to pinpoint at this point. So even fundamentals improved, the valuation piece can be much more difficult to figure out. But we believe over time, that valuation should reflect the underlying fundamentals of the companies. So that's why we continue to focus on the corporate fundamentals and earnings. Yeah.
No, but you take Tencent's numbers, for example, every part of the business did so well. And so, when does money start to flow and chase the trade, so to speak? And what is fair value, really? I mean, if Chinese equities are going at roughly 10 times forward earnings, when do we get to a place of fair value? And what would that fair value be? How much more upside from here?
Yeah. As you can see, a lot of Chinese companies, especially internet industries, the forward PE is still at very low level compared to recent history. And year to date, we have seen some re-rate, and that explained a lot of good companies' outperformance. So even with today's softness to some extent, which is not too bad, now you can see the stock back up again. The stock has done very, very well. So re-rate has happened, but not yet even close to the average as we've seen in the last 5 years. But maybe we will never get to the average level given that the whole backdrop has changed. But they don't even not need to get there as long as the corporate earnings start to recover and there's certain re-rates start to come through. Those stocks could still set up very good year for the outperformance. So that's how we kind of think about the Chinese equities. So from the theoretical perspective, a lot of those companies look very interesting and attractive at this point.